In the evolving world of finance, where traditional banks rub shoulders with innovative digital solutions, it's easy to get confused about what's what. Many people use services like Wise, formerly TransferWise, for their international money needs and naturally wonder, does Wise have a banking license? This is a crucial question, and as a finance expert, I'm here to provide a clear and straightforward answer that anyone can understand, even if you're just starting to explore the nuances of financial services. The short answer: no, Wise does not hold a traditional banking license. Let's cut straight to the chase. Wise does not possess a full traditional banking license in the way that, say, a major high street bank like HSBC or Citibank does. This is the most important distinction to grasp. However, this "no" doesn't mean Wise operates outside of financial regulations or is unsafe. Far from it. It simply means Wise operates under a different legal and regulatory framework, specifically as an electronic money institution, EMI, and a money services business, MSB. What's the difference? Understanding EMIs and MSBs. To truly understand why Wise doesn't need a full banking license, let's break down what an EMI and an MSB are. Electronic money institution. EMI is a financial institution authorized to issue electronic money. Think of electronic money as a digital representation of real money. When you top up your Wise account, you're essentially exchanging your traditional currency for electronic money held by Wise. EMIs are regulated to ensure that they hold an equivalent amount of real money to cover the electronic money they issue, and that they safeguard these funds. Money services business, MSB. An MSB is a business that transmits or converts money. This includes services like money transfers, currency exchange, and check cashing. Wise falls under this category because its core service involves moving money from one currency to another and sending it across borders. MSBs are regulated primarily to combat money laundering and terrorist financing, ensuring that financial transactions are legitimate and trackable. So, while a traditional bank can take deposits, lend money, e.g., mortgages, loans, and offer a wide array of complex financial products, Wise's operations are more focused. Its primary purpose is to facilitate international money transfers and allow users to hold and manage multiple currencies. The regulatory landscape. How Wise ensures safety. Just because Wise isn't a bank doesn't mean it's unregulated or risky. In fact, Wise is heavily regulated in every jurisdiction where it operates. These regulations are designed to protect you, the customer. Here's how Wise ensures the safety of your funds. Global licensing. Wise holds specific licenses from financial regulatory bodies around the world. For example, in the UK, Wise Payments Limited is authorized and regulated by the Financial Conduct Authority, FCA, as an electronic money institution. In the European Economic Area, EEA, it's regulated by the National Bank of Belgium. In the United States, Wise is licensed as a money transmitter in various states, and where it doesn't hold a direct license, it partners with regulated banks. Similar robust regulations apply in Australia, Singapore, Canada, and many other countries where Wise operates. These licenses mean Wise must adhere to strict rules about how it handles customer money, how it reports transactions, and how it prevents financial crime. Safeguarding your funds. This is a critical concept and perhaps the most important difference from traditional banking in terms of protection. Since Wise doesn't have deposit insurance like the FSCS in the UK or FDIC in the US, which protect bank deposits up to a certain amount, it uses a method called safeguarding. What does safeguarding mean? Separation of funds. Wise is legally required to keep your money completely separate from its own company funds. This means your money is held in special, segregated accounts at established, reputable banks like JP Morgan Chase and Barclays. No lending. Unlike banks, Wise does not use your money to lend to other customers or invest in risky ventures. Your money is held in these safeguarded accounts, readily available for your transactions. Protection in case of insolvency. Because your funds are kept separate and not used for Wise's operational activities, if Wise were to face financial difficulties or even go out of business, your money would be protected. It would still be accessible to you, as it wouldn't be part of Wise's assets that would be used to pay off its creditors. A portion of safeguarded funds is also invested in high-quality, low-risk liquid assets, such as government bonds, to further diversify and secure your money.